Hello and welcome to the Leader's Edge podcast. I'm Sandy Laycox, Editor-in-Chief of Leader's Edge. This episode marks the beginning of a 5-part series of interviews with a number of subject matter experts from global insurer and reinsurer AXA XL. In this episode, we meet Maria Duhart, head of AXA XL's commercial bonds, political risk, and credit and bond practice, as well as Stuart Barrowcliff, Vice President and Senior Underwriter of AXA XL's Political Risk, Credit and Bond team in the Americas. In this conversation, we cover rising hotspots for political risk globally and what that means for crucial investments in resilience and economic infrastructure. We also look at parts of the globe where investment is becoming more attractive, as well as the barriers and opportunities for renewable energy. Give it a listen. Welcome, Maria and Stuart. Thank you so much for joining me today. We're going to start off with a real quick primer. Stuart, let's start with political risk insurance. Can you give us just a brief explanation of how it's used and a real-world example?
Sure, Sandy. Thanks for inviting me to this. Political risk insurance. It's used by companies that operate or manufacture internationally. They face a lot of risks in foreign markets that they aren't familiar with. It's different than their home market. So traditionally, political risk insurance will help a company protect their investments, which would be, any kind of manufacturing or even, office space, office buildings, from catastrophic losses caused by actions taken by a local government, things that would deprive them of their ability to operate, even expropriation of their entire company, license cancellation, export license cancellation, capital controls. It's also used to cover physical damage losses caused by political violence events. Real world examples, there are many U.S. multinationals have policies in place that cover their physical presence abroad. And these policies can cover, 10, 15, 20 countries or more. So, from chemical manufacturing to, cable manufacturing to even, information technology companies use this. That's the traditional market. It's evolved tremendously over the last, let's say 20, 30 years. So today you find political risk and non-payment coverages included in the same policies. And these are used to cover investors or lenders that are supporting, let's say, power projects. And usually in developing markets, power projects, as a good real world example, power projects will enter into a contract to sell their electricity to a government-owned utility. So there's the political nexus. You're selling to a government-owned borrower, and the policy would then respond in the event that there's a default, they fail to pay, and that protects, both the lenders and the sponsors or the investment in those projects.
Great, thank you. That was great. Let's go to Maria and give us a quick primer on commercial bonds.
Yeah, thank you, Sandy, and thank you for inviting me as well. So commercial bonds really work as a guarantee and, of a company performing a certain action. So it's a 3-party agreement where you have our customer who is actually performing, either a compliance obligation, a financial obligation, or a performance type obligation. And the bond is going to guarantee that to a third party who is the beneficiary of the bond. So, commercial bonds are quite varied, right? So they could guarantee, for example, a judicial process. So let's say a large pharmaceutical company might have been sued, for example, as a result of a class action lawsuit on a product that they sell. And if they lose in the primary court, they can appeal to a higher court. In order to appeal, they have to post a bond to the court that guarantees that they're going to make the payments under that, and this, once the case settles. So that's one type of guarantee, right? We also guarantee, payment obligations such as customs duties. So a manufacturer importing goods from Europe or Asia that needs to pay duties to customs needs to post a bond that guarantees, 10% of the duties that are going to pay in a given year. It also guarantees, taxes, fees on imported goods. It could also guarantee compliance obligations, right? That a company is complying with the, specifications of their operation within a certain state or a certain municipality. There's also environmental type obligations such as, reclamation, for example, or restoration of a certain area, to extract natural resources. So let's say a mine, right? Once the life of the mine ends, the bond guarantees that the company is going to actually reclaim the land to the state that it was before, reforest it and get it back to a state, that's where it's clean and there's no pollution as well. It also could guarantee, supply and installation of equipment or, performance type obligations. So those are just some examples of how commercial bonds, guarantee, the work that our customers are doing.
So both of these products, very important for the volatile and sort of crazy world that we're living and working in. Let's dig a little bit deeper. Stuart, let's discuss the current level of volatility that you're seeing in the world. Give us some particular hotspots that you see having increased political risk over the next 5 years or so.
Yeah, I think there's a political volatility is kind of what I would point to. One of the key areas of volatility. Political changes. Looking at Latin America, for example, Peru just had a presidential election and moved to the left. We have AMLO in Mexico, more of a populist. In Chile, we're looking at a very stable country, but a country that's now planning to rewrite their constitution, which will change the document that's governed the country for a long, long time. And in Brazil, we also have a populist nationalist president. These kinds of changes can change the way the government treats foreign direct investment, and that's where the nexus is between political change and volatility and political risk. Some governments become more statist. They want to go in and they want to take over private sector companies. We see, AMLO in Mexico expanding, the reach of the state into the power sector and trying to basically make it more difficult and limit the opportunities for private sector investment, as an example. So that changes the way that we look at things and the way we analyze the transactions we're asked to support. Another, let's say, hotspot or issue would be something that's been developing for a while and will continue is, decline in globalization, weaker multinational institutions. We always talk about a rules-based system. The importance of that is that helps companies that are active globally, and I would say most of our large corporates are. That helps them understand, the risks and how to operate and what the rules are and what they need to do to operate in certain countries or to trade. And this is going to continue to be something that's a bit difficult. The issues with China, the difficult relationship, it revolves around trade largely. And so that's an area of, let's say, a hotspot going forward, that there is really a weakening in the kind of the global system. And then another hotspot or element that I think will create and is creating volatility is the push to decarbonize. In other words, go towards become greener, become more renewable. That's a structural shift. It's been going on for a long time, and as the shift continues, this creates opportunities, obviously, for those that are investing in renewables, but it also creates some challenges for a lot of emerging markets that depend on hydrocarbons as their major source of revenue. So a good example would be, a number of countries in sub-Saharan Africa have depended, such as, Angola is one, Mozambique is another. They are looking to hydrocarbons to really underpin their economic development. An example of a political risk issue is what has happened in Mozambique that has, very, very large natural gas resources offshore, and obviously they want to develop it. There's been political violence in the north of the country, which has actually put some of those major projects on hold, and has led to some of the major investors kind of pulling back there. Others are already, moving forward, and a lot of them have taken advantage of and used political risk insurance to help mitigate their risk profiles there.
So you're kind of seeing this some positive movement towards, decarbonizing and those types of things, combining with other countries that are working to build their economic pipeline and dealing with their own political violence and just creating some of this volatility and these forces pushing upon each other, it sounds like a little bit.
Yeah, I mean, it's a structural shift, in the energy sector that is having an impact, globally, right? There's a lot of investment, a lot of assets, a lot of companies involved in hydrocarbons, and there is a push and a shift towards renewables. We see a lot of renewable projects, for example, in Latin America. A lot of countries have goals to shift over and have a much higher percentage of their energy coming from renewables. Well, that's an opportunity for those that are investing there, that manufacture, let's say, wind turbines or solar panels. But for those countries that are looking to develop their their hydrocarbons, their oil, offshore natural gas, it creates a challenge. It's a competition. Oil prices now have shifted back up, not as low as they were, let's say, over the last 5 years, but clearly the vulnerability is there, and they don't have a diverse economic base, so they tend to be concentrated and depending on one source of revenue, to basically finance their development.
Okay, Maria, are there areas that you have seen become less risky, easier to invest in recently?
Yeah, Sandy. So to tie into what Stu was just mentioning, renewable energy in the past was a bit more risky than it is now. Why? Because there's a lot more tax incentives, and there's also mandates in states in the U.S. Net zero carbon emission goals, right? And to move into renewable energy and away from thermal coal and other sources of energy, such as natural gas as well. And so, there's, some current structural factors that support the growth of renewable energy, such as, policy support, as I mentioned, tax breaks, subsidies, mandates from the states. Some of these are shifting, location, especially in the U.S., support from the federal government to state. So now it's more geared towards state mandates. There's also increases in efficiency and sharp reductions in technology costs that have been allowing renewable energy to compete against cheaper sources of energy. So that has allowed us to see this industry as less risky as well. There's also, vast untapped offshore wind potential, right? So beginning to ramp up in the Northeast. So we see more customers, bringing in wind turbines and installing them offshore, which actually is good because there has been some pushback on, customers not, or, people not wanting those assets to be in their backyard, right? That NIMBY, so not in my backyard concept. So putting them offshore has worked really well. Then corporate PPAs, which is the power purchases agreements, are the contracts that we review to make sure that, because we are really guaranteeing those contracts, right? And the surety bonds guarantee the construction of the power facility, and also other bonds cover the production of the power generation and warranties over many years. So as a result of that, we have to be comfortable with, the industry and the financials, given that it's more of a long-term obligation. And we see also an uptick in battery storage technology, right? So that will provide a further boost, to this industry. We support those manufacturers of battery storage, through supply and performance bonds as well. So that was kind of one of the downsides of renewable energy, which is being addressed by that storage technology. There's still some risk, in the industry where you have some vulnerabilities to changes in the political, environment as well. So it could be a bit unpredictable. But, and like the rest of the power sector, renewable energy policies and regulation could vary by state. And then, but at the same time, we see a lot more investment in renewables and a positive environment right now. There's another segment that has also, we've seen reduced risk, and that's, home building, right? As more people are moving, from cities into into more rural areas, right, or suburbs. Home builders were winners during 2020 with people working from home, buying new homes. So it's been actually a positive, I would say, if anything, of the pandemic. This segment has benefited from it. While we saw that during the global financial crisis, as a result of the bubble bursting, that was not a segment that we were looking to support as much, because it had higher risk, right? So just to give it some perspective, there have been some shifts into specific industry segments and into either higher risk or lower risk segments. So there's some expectations that single family home builders building starts will rise as much as 7% in 2021, and then multifamily homes will be will kind of be reduced in terms of investments. But I think we see more opportunity there, and we support them on bonds as well, subdivision and performance bonds. So.
Are you seeing on the home building, because that's definitely been an interesting topic lately, are you seeing any issues with, lumber supplies and, those types of factors coming in?
Yeah, definitely a very large increase in pricing of lumber, right, and steel, which is utilized in construction. And some of it is passed on to the consumer, but some of it, is retained within the home builder. But yes, we have seen shortage of supply and also increased pricing, up to 30% in some cases. So it's substantial, and it is contributing to a bit of inflationary trends in the US. But we do see that subsiding towards the end of the year. So from our home builders and some, as more supply comes in, we do see trends of reduction in pricing towards the end of the year.
Well, thank you both for sharing this time with me. It's been really interesting and fascinating hearing about all the work that you're doing. I really enjoyed it, and I hope that we get to chat again.
Thank you, Sandy. Our pleasure to be here.
Thanks, Sandy.
Enjoyed it as well. Thanks. Bye.
That was Maria Duhart and Stuart Barrowcliff of AXA XL. Join us on our next episode, where we continue the conversation with Maria and Stuart, covering the effects of COVID-19 on political risk and commercial bonds, as well as the investments AXA XL is making in sustainability and climate resilience. Thanks for listening.